Have you ever wondered how all this accounting stuff works in real life? Well, you've come to the right place because I'm Professor Capko and I'm going to show you an example, and it's actually a very good example from Home Depot's just released quarter two results for 2023. This is a textbook example of a nice set of financial statements, and I'm just going to show you some highlights of things that you should be looking for or that you would see in the real world and all how accounting should be presented. But first, I want to say I believe something wonderful is going to happen for you very soon. Be on the lookout for it. And now back to the video. As I mentioned, we're going to take a look at the Home Depot second fiscal quarter of 2023 results. And we're just going to see how nicely they presented them. I picked these out because they are just pristine. They are clear, they are straightforward, and this is how it should be done, in my opinion. And bravo to the financial team at Home Depot for putting this together. I do want to mention, as a full disclosure, I do have financial interest in Home Depot. Among other things, I am an investor in Home Depot. So just keep that in mind. Although I believe this is a fairly unbiased look at the presentation of the financial statements. So, as you may or may not know, publicly held companies such as Home Depot have to provide quarterly results to the public and to their investors. And these results are usually the four financial statements, and there's some guidance regarding them as well. Now, this is for their fiscal year. And for those of you who are not familiar with that term, that means that they are not on a calendar year. A calendar year, of course, would begin in January 1st and end on December 31st. But if a company is on a fiscal year, and there's many reasons why a company might choose a fiscal year instead of a calendar year, and that is really outside the scope of this video. But a fiscal year would start at a different time than the actual calendar year. So I believe Home Depot's fiscal year starts on February 1st and goes through January 31st. I could be wrong on that, but that is my recollection. So their deadlines and for reporting would be somewhat different. So this is for the second quarter of fiscal year 2023. So this is just for the quarterly report, but there's some comparison in here to last year, which there should be, and also for the 6 months. Here in the beginning would be just some information introducing it, of course, telling us the date of it. These are as of August 15th, and this comes out of Atlanta, which is the headquarters for Home Depot. And it's interesting. I like that they've got their registered trademark here mentioned. That's a good way to protect it. I'm going to do some series on a lot of legal concepts, including trademark law and intellectual property. So keep an eye out for that down the road. So they are the world's largest home improvement retailer, and they reported sales for the second quarter of $42.9 billion. And they tell you right off the bat that's a decrease of 2% from the second quarter of last year's second quarter. So right in the first paragraph, it's giving you the amount of the sales and how it compares to the same time period last year. Comparable sales for the second quarter of fiscal 2023 decreased 2%, and comparable sales for the U.S. decreased 2%. Now, this is Home Depot is an international company. They are, of course, United States based, but they do have stores in both Canada and Mexico. So this number would be just for the United States, this second part, but they all seem to be about the same amount of decrease throughout the company. It tells you here the net earnings for the second quarter. Now, net earnings are after you subtract out the cost of goods sold, and you're going to subtract out your sales costs. For fiscal year, second quarter of the fiscal year 2023 is $4.7 billion or $4.65 per diluted share. And I'll do some videos talking about what diluted shares are compared to just the shares. So keep an eye out for those as well. And it gives you, compared to net earnings from last year for the same time period, was $5.2 billion or $5.05, $5.05 per diluted share for that same period. There's some information here. There's a quote from Ted Decker, who's currently the chair and president and CEO of Home Depot. And he has said they're pleased with their performance for the second quarter, and it goes on to give some more information. There is fiscal 2003 guidance given. This is they're reaffirming their guidance. In other words, companies give some future projections of what they expect, and this is called guidance. And it gives investors an idea of what the company believes is going to happen. And companies have to be very careful with whatever they promise because should they not reach what they have promised, that could have a negative impact on their share prices. However, they have to avoid the temptation to just underpromise so much that they easily blow it out of the water, because you do that too much, it's number one, could be considered some sort of manipulative or fraudulent tactic, and also it's like crying wolf. People will start seeing right through it. So they need to be as accurate as they can. And it's saying for this year, sales and comparable sales to decline between 2 and 5% compared to last year. Operating margin rate to be between 14.3% and 14%. And again, these terms I go over in other videos in this course, but basically we're talking about how much it is when you get the net sales minus the cost of goods sold. The tax rate will be approximately 24.5%. For those of you who say corporations don't pay any taxes, 24.5% is fairly substantial. Interest expense of approximately $1.8 billion. That's a lot of money to pay in interest. And diluted earnings per share percent decline between 7% and 13% compared to fiscal year 2022. So the writing's on the wall. They expect to not have as good a year as last year, and the quarterly results are right on track with that. So we do appear to have a declining economy at this point, and you may want to prepare accordingly. Here it talks about a share repurchase authorization. The board of directors also authorized a new $15 billion share repurchase program effective August 15, 2023, replacing the previous authorization. I don't know what the previous authorization was. We could research that, but for purposes of this video, we don't need to know that. The share repurchase agreement is repurchase where they're repurchasing shares in the open market. The company is buying their own shares of stock up to $15 billion. This is done for a couple reasons. Number one, it will reduce the number of shares in the market. Therefore, that would increase the amount per share that the earnings per share, because there's fewer shares out there, and it potentially would increase the price of the stock because there's fewer shares and more people. If the same number of people want to buy the stock and there's fewer shares available, supply and demand would say that would drive that price up. And also, companies do that oftentimes when they believe their share prices are low, and they believe that by purchasing now when it's cheaper, then it would be down the road. So that is some information about that. Going forward, we also have at the end of the second quarter, the company operated a total of 2,326 retail stores in all 50 states and the District of Columbia, Puerto Rico, and the U.S. Virgin Islands, Guam, 10 Canadian provinces, and Mexico. So, and it employs over 470,000 associates. It's traded on the New York Stock Exchange, and their symbol is HD. So if you look at the stock ticker symbols, you'll see HD, and that is Home Depot. And they're in part of the Dow Jones Industrial Average and the Standard & Poor's 500 Index. And if you want, put down in the comments if you want me to do some videos explaining what those are. Following that, there is some legal disclosures, and I won't get into that for this video. And then there's some contact information if anybody has information, have questions, news outlets or investors. Let's get to the heart of this. These are the financial statements, condensed and consolidated statements of earnings. So it's important to know this is unaudited. So there has been no auditing, no CPAs have looked at these and signed off on them. This is just the company reporting them. We start out with net sales and we compare. We've got, this is for the 3 months ended on July 30th. And here it is for 2023 and here for 2022. And why is there a difference in the date, ending date? I believe that Home Depot usually starts their fiscal year on a Monday. So they will finish out a year on a Sunday and then start their fiscal year on the very first Monday. So I think that may be why the difference there. So we set out the net sales, and mind you, these are in millions of dollars. So you have to add some zeros onto this, but they shorten it up by saying this is in millions of dollars. We then have the cost of sales, and that gives us our gross profit when we subtract out the cost of sales from the net sales. Then we have various operating expenses, some selling and general administrative costs, depreciation and amortization. I've got videos on what all that means, and that gives us our total operating expenses. We subtract that from the gross profit to give us our operating income. And of course, we've got over here the 6 months for the first half of the year as well. And on the far end, we've got the percentage change. If it's going up or down, the parentheses mean negative, so it means it's going down. If it's not a negative, if it's a positive number, then it will remain as a doesn't have parentheses around it. So these are all percentages down here. Then after that, we have interest and other income expense. So we've got interest and income, and interest income and other net. So if there's any kind of net income, so our interest expense is here, and our interest and other net. They total it up there. And the earnings before provision for income taxes. So this is the earnings before the income taxes. They make a provision, an estimate of what the income taxes will be, and that gives us our net earnings. All right, so then we have a basic weighted common share, so the basic earnings per share of 4.66, and we have a diluted weighted average common shares, and from that we have a diluted earnings per share of $4.65. This is all good information for investors. And then we have some selected sales data, such as the number of customer transactions, the average ticket, in other words, how much on average does each customer buy each time they ring something up at the store or online, and the sales per square foot. So the sales per square foot is listed there, so you can compare that with the square footage of all the stores. Next, we have the next statement, which is a balance sheet, nicely laid out for July 2023, 2022, and also at the beginning of the year and January 29th, 2023. So we've got the beginning balance essentially here, and then we have these. And remember, a balance sheet is a snapshot. So we have cash and cash equivalents. We have all these assets here: receivables, net, merchandise inventories, other current assets. So then they total up the current assets, and the net property and management, operating lease, right of assets. We have goodwill. I've got some videos talking about what goodwill is. other assets listed here. So it gives us a total number of total amount for assets. Then we have our liabilities and stockholders' equity, starting out with their current liabilities, short-term debt, accounts payable, accrued salaries and related expenses, current installments, long-term debt, current operating lease liabilities, other current liabilities, total current liabilities. Then we go to long-term debt, listed here, long-term operating leases and other long-term liabilities gives us our total liabilities. And then we have the plug-in, which is the total stockholders' equity, and that's the amount that added to liabilities makes it balance. It makes it match up nicely and equally with the assets, and that is our balance sheet, and it does balance. And lastly, we have our consolidated statements of cash flows. We have, again, for both years, and these are again unaudited, and we always start with our net earnings, and then we reconcile these type things that are not cash: depreciation, amortization, stock-based compensation expense, changes in working capital, changes in deferred income taxes, other operating activities, and that gives us our net cash provided by operating activities. And then we go into cash flows from investing activities. Those of you who are taking accounting courses, you'll recognize these. And that includes capital expenditures, payments for businesses acquired, net, and other investing activities. Sorry about that. And then we have cash flows from financing activities, such as repayments of short-term debt, proceeds from long-term debt, prepayments of long-term debt, repurchases of common stock, proceeds of sales of common stock, cash dividends, other financing activities. Takes us to the change in cash and cash equivalents, effect and change rate changes on cash and cash equivalents, and the cash equivalents at the beginning of the year and the cash and cash equivalents at the end of the year. And that would balance with the balance sheet. So this is just an overview. I think it's a very nice and clean presentation. If I could find a good link for it, I'll put it down in the description so you can take a look at it yourself. But bravo, I say again, good job to Home Depot on this. If you enjoy going over financial statements like this, give this video a thumbs up. And if you want to see more material like this, go ahead and subscribe to my channel and hit that notification bell so that you never miss a video. Thank you.